All right. Good afternoon, everyone. Rich Swerbinski with the Mortgage Collaborative back again as we are every Tuesday at 2 p.m. Eastern with the last week in Mortgage Today. Each week, I select one of our lender members from our network to join me as a co-host. And this week, I am thrilled to be joined by the president of Success Mortgage Partners out of Michigan, Allison Johnston. Allison, thanks for joining us.
Hi, thanks so much for having me. I appreciate it.
Absolutely. And yeah, I'm sure you got nothing going on right now. Moving houses, kids, pets, record volume.
Yeah, it's been interesting. We're doing the hybrid model for school, so they're in 2 days a week and home the other 3. So it's been interesting working from home, record volume, and teaching your kids topics that you can't even remember that you took in high school or middle school.
My son is now a sophomore in high school, and it's getting to that point where he's showing me his homework, and I'm just lost completely.
Yeah, it's definitely tough, and we've seen that too with our staff too, with elementary school. You know, they're trying to work during the day, do Zoom meetings with their kids. It's been interesting.
And I know you have more than the 2 kids I have. How many kids do you have again, Allison?
I have 5, but 2, they still live at home, but one's 21, one's 20, and I have a senior, and then a freshman and a middle schooler.
Oh, okay. So you got all in that kind of 13 to 21 range.
Yep, super fun.
Cool. Well, thanks for joining me. And per usual, kind of try to use the first part of this session to go over the latest news headlines in the mortgage industry over the course of the last week. And that usually kind of morphs into just a general discussion on the current business climate. No shortage of topics to talk about there. So, but I want to start, Allison, with you on just the whole IPO thing, which is not new news. There's, Rocket and United Wholesale, both have gone public recently.
Yeah.
And a lot of rumors that we're going to see the same from Caliber, Loan Depot, AmeriHome. As the president of, a couple $2 billion a year independent mortgage bank that's also in Michigan, where now the 2 largest lenders in America are, what is your perspective on that whole dynamic, these big companies getting public and going bigger, and what it means for the members of TMC and Success Mortgage Partners ultimately?
It'll be interesting to see how it all pans out. I feel like, just my personal opinion, Quicken and United Wholesale seem to follow in each other's footsteps. When one has a program that comes out, the other does for the IPO. So it's going to be interesting to see how that and what it will look like. For us, though, with Quicken and United Wholesale, they're not in really where we compete. We do see once in a while, maybe from a broker channel, that we might see some competition in there. But I mean, we're not overly worried. We're still growing and making changes. So we just are going to see how it pans out. But it is interesting on most of these other companies, Caliper and Loan Depot and AmeriHome also possibly going public. So we're just going to have to wait and see how it pans out.
Interesting. Same church, different pew, the whole mortgage broker movement, just over the course of the last 2-3 years, depending on what stats you're looking at, the share of loans mortgage brokers are doing, some say it had gotten as high as 20%. I'm not sure if I believe that, but are you losing like loan originators to becoming mortgage brokers? What has that looked and felt like for you guys competitively the last couple of years?
We actually lost one to go to a broker shop, and for her, she felt like it was easier for her to be a broker. She could make more money. But the problem with her becoming a broker is she has all this other responsibility, right? I think that those 2 companies, both Quicken and United Wholesale, do a great job of recruiting top thoroughbred loan officers, as we call them, and trying to get them to go to a broker model. But what they forget is, being a broker, you're still responsible for the compliance. You're still responsible for audits. You're still responsible for all these other things that our loan officers aren't used to doing. And that can take away from their production. So we did lose one to a broker shop. But then, she considered coming back, but, we just told her, hey, you can stay as a broker, that's fine. But it was interesting because her team came back. So her loan partners and her processors just said, it wasn't a great model for us. They actually made less money as loan partners and processors, so they came back and joined our team. But I think going into that broker model, there is a lot of regulation that I don't think our typical loan officer is prepared for, especially in Michigan. They're going to give them a call and want to do a welcome audit, but they're audited just like everybody else. And one thing that the broker community needs to be more educated on is when you go through an audit, it's hard to call a Quicken or a United Wholesale or whoever they might be selling their loans to obtain records. They have to make sure they're keeping those records because, if they get cut off from an investor or something goes sideways, or they're busy, right? They're busy like we are. They're not going to be able to get them their files. So it's just maintaining their files and making sure that they're following all the regulations with policies and procedures too. So.
Thanks, Allison. And sticking with the same topic, and for those of you that just joined, thank you for joining us. And I have with me this week the president of Success Mortgage Partners up in Michigan, Allison Johnston. And as always, any questions, comments, feedback, anything you want Allison and I to drop it in the chat or the Q&A, and we'll talk about it. So on the topic of Quicken, recent news is marketing services agreement between Quicken and Realtor.com. And I think, just talking to our members, CEOs, one of the biggest general competitive fears they have is like, as we move forward in the future, like the loans you lose that you don't even know about, right? The previous client that's looking at a home on Zillow or Realtor.com and gets trapped into whatever creative marketing, their in-house lenders or lenders like Quicken that Realtor.com now has a marketing services agreement due to keep you there and get you to apply. So any thoughts on that recent news, the Realtor.com marketing services agreement with Quicken?
We have some loan officers that are concerned, but, we're just going to keep plugging forward and keep doing the best we can with the volume that we have and continue to grow. I mean, it's hard. They're right in our backyard, right? But, we're just going to have to take it as it comes.
Sorry to pepper you with large Michigan IMB questions, but
yeah, and no, I completely yes, they are in our backyard for sure, but all we can do is tell our loan officers, we very rarely do we lose a loan to Quicken, right? But there are probably deals that they get, they advertise, or I think it was United Wholesale that advertised rates for 1.99, right? They get just under 2%, right? But what is the criteria for them to get that rate? How many points is it? When are they going to be closing? I mean, we're small enough still. I mean, we still do about $2 billion a year, but we can move files very quickly through our organization. We can close loans quickly. And so we just keep telling our loan officers, one, their loan officers probably get paid less than ours do, and they don't have the flexibility. So there is a lot of anxiety in the industry anyway with what's going on. So we're just telling them we're taking it one day at a time. We'll keep our ears out and eyes out if we hear anything, and we'll let them know. But it'll just be interesting to see how it all plays out.
Thanks, Allison. Moving to the topic of home values, Case-Shiller came out recently, 15% nationally, home values up year over year. That could be a good thing, a bad thing, depending on how you look at it. What are home values in the Michigan? I know you guys are all over America, but in the Michigan market, what's going on with values up there? And just the home value acceleration, explosion in general. Your thoughts on that?
We are definitely seeing, values going up, just looking at appraisals all day long. In Michigan, houses are moving very, very quickly. We are still probably now about 55% purchase. Back, first quarter, second quarter, we were mainly refi. So we are seeing the purchase market come back. But we have seen homes, my house is up for sale right now. Hopefully I'll get an offer soon, but my house is up in just the 4 years that I've purchased it. So it'll be interesting to see if they stay up. It'll be interesting. I know we talked a little bit before just what's going to happen in the political market, who might get in office, what that's going to look like. There's some talks about, depending on who gets in office, a fairly large home buyer credit on the purchases. So we're interested to see how that might pan out with the refinance business that we have too. So almost like purchases will be very busy, refis will be very busy. But one of our concerns is, as we continue to staff up for the volume we have, we always say, what happens when the punch bowl gets taken away? What happens when rates go up? What happens when, if there aren't as many purchases? How are we going to maintain the staff that we've hired for the volume? And so we're basically looking at a lot of automation and also just more recruiting so that when the volume does tip down a little bit, we have more loan officers and more production coming in, maybe looking at different channels for that. So, it's going to be an interesting time in the next probably 90 to 120 days.
Absolutely. And you touched on a number of things there that I wanted to actually get to, the election, hiring, automation, all things I'd love to pick. Let's start with the election, forgetting completely just personal politics, but as the president of a mortgage company, how do you view the election? Just fundamentally, Trump wins versus Biden wins, the things going through your head on the business side as it relates to the upcoming election.
It's going to be interesting. I mean, it really depends on who's going to get in office. What's that going to do to the mortgage companies? What's that going to do to interest rates? Is there going to be a home buyer credit? Is everything going to go blue, right? Is the Senate, is the House? It's just anytime there's an election, there's always anxieties. I mean, we saw in 2016 when Trump went in office, what happened to the market. So we're just trying to be as prepared as possible. So it'll be interesting. I mean, we are just waiting to see what happens. Typically the mortgage industry has done pretty good if a Democrat's in office, but we've had our fair share of it going well with a Republican. So we just have to wait and see. But I do think there will be some type of upsetness in the market regardless of who wins.
Certainly the future of Fannie and Freddie hinging largely on which way the election goes. And yeah, you touched on, I know Biden has talked about a first-time home buyer tax credit, similar to the one that I want to say was 2010, 11, somewhere in there.
Yeah.
The details of that, I think, are similar to what was done back then, that I know had some very positive impact on the purchase market, especially the lower end of it, which a lot of people fear, just with home prices booming. The employment disruption that we've seen nationally affecting young people more than middle-aged or older people. What that could mean for affordable housing in America, the first home buyer market. Certainly, a lot at stake coming up here in early November. So
yeah, and I think with everything that's happened in 6, 7, 8 months, the engines have gotten different for running AUS. So the credit box has gotten smaller in some cases. So you're not seeing as high as DTI get approved. We're seeing loans that we used to be able to run through and get unapproved eligible, and now we're seeing them get a refer where we can't. So it's interesting to see, is that housing market going to open up a little bit more? Are investors going to be more comfortable with lower FICO scores? Are the warehouse lines going to be more comfortable with the DPA and housing loans for the states, like the MSHDA or, Tennessee housing? So it'll be interesting to see if they're going to start coming back a little bit more on some of the credit box.
Yeah, because, I saw this week in the news headlines, I think MBA came out with a report essentially saying credit was the tightest it's been in a long time. And the way my brain looked at that, is that exclusively just related to loans not getting approved because of things related to the pandemic? Or is there, I guess, put another way, if there were no pandemic, do you think that same headline would have came out this week on credit tightening?
I don't think so. I think people got scared, right? The unemployment rate went up significantly. I think investors and people that hold servicing got a little bit scared. And I think what happened is Fannie and Freddie, they tightened the box. So they don't want the higher, DTI loans. They don't want some of the lower FICO scores. So we've seen it. We've seen investors not really come all the way back on certain programs, and warehouse lines not come all the way back on certain programs. They've put thresholds in for FICO scores, even though I might be able to sell that housing loan that you really don't make a whole lot of money on, but I can sell it to the end investor. But the warehouse line will say, okay, well, we're going to cap it at 660 FICO, even though that program goes down lower. If you want to go lower, then they want to review the credit report. They want to look and see, did you get approval? And they might grant an exception on it. So, it's hard to say if that's going to open up again. I'm hoping that it does because, even if it's a little bit lower of a FICO score, some of those loans still perform very nicely. So.
And certainly you have to be sure that Fannie and Freddie are getting a direction from Calabria and FHFA, like, hey, prepare yourselves to come out of conservatorship. And I'm sure that along with that comes some tightening of the screws in the back end on LP and DU.
Well, and I think that half point hit that's put in now, I think that's just the beginning. I think we're going to see steeper risk-based pricing hits. I think that it's going to be driven by pricing as well. So I think that's just the beginning of some fees that we might see.
I think you're right. And I was just having this discussion with somebody else yesterday that if you do see a continuation of the uptick we're starting to see, just some of the pandemic cases nationally as we get in the fall and the winter, that you could see, the LPAs get bumped up to price in the risk of like a second wave of foreclosure loans that are going into default. So, but
and forbearance and yep, for sure. I think that that half point hit, in my personal opinion, was a money grab because they didn't touch the purchases. So I think that I think that it's just the beginning of some other fees that we're gonna see. Hopefully not as steep as that half point on all three sides.
Yeah, hopefully. So we got about 10 minutes left in the last week in Mortgage Today. For those that have just joined recently, I'm joined this week by the president of Success Mortgage Partners, Allison Johnston. And I wanted to move the discussion, Allison, into the world of tech, automation. I know you guys at SMP really strive to stay ahead of the curve there. You implement a lot of bots and automation and, stuff that is coming more broadly to the mortgage industry as a way to automate tasks that don't have to be manual. So couple questions I have for you. One that I've asked the last few people we've had on, I think just one of the things we've heard throughout the pandemic and how busy things have been, obviously lenders are making money and it's all good there. But one of the things that I think concerns a lot of our members is they've been unable to stay as on top of and move forward projects related to emerging and new technology. Would love your thoughts on that topic as the president of a mortgage company. And just in general, bots. I know you guys have, been using them there for some time now, and your thought on that specific piece of technology and how quick you might see more mainstream adoption in the mortgage industry.
So we're big on bots. We, they have a fancy title, developer software, whatever they might be, but we have 3 developers that we've hired, and we're running it as a separate department. And we're doing that because we are so busy. I mean, we have more loans that we know what to do with, but we can't lose sight of the technology. We have, automated the ICD process almost probably 75%. So the nice thing is, once we collaborate with title, if they collaborate with us, that never comes back to our closing department. The loan officer gets an automatic little thing on their computer or their phone that says, do you accept the CD as is, or do you want changes? If they hit accept, it automatically goes to the client. And if they never respond, it goes to the client 3 days prior. We have automatic ordering of the flood cert. So when the file hits the processing milestone, the flood cert automatically gets ordered, gets put in the bucket. It reads the flood cert. If it's in a flood zone, it emails the loan partner processor, loan officer, automatically sends out the flood disclosure, and then sets a condition for underwriting. We have about 20 bots in process right now. The one we're testing right now is an appraisal one. There's been a lot of talks when you get, your collateral underwriter at 2.5, you really don't have to look at the appraisal. Well, although Fannie and Freddie will rep and warrant it, there are still some things you have to look at the appraisal because you're still on the hook. So we made about 25 questions that really the underwriter would look at. So we're teaching the bot through an OCR reader to read the document, read the address and do a comparison, look and see if it's subject to, make sure that the comps are within a certain range, make sure there's nothing that says deferred maintenance, there's about 25 of it. And if all 25 hit, it will automatically approve the appraisal only on conventional loans. So we have probably 28 bots that we're testing, are in place or going in place. Just because, we have one for fraud guard. It'll automatically order the fraud guard. It'll read any part of it. And if it's got an error, it's going to let the underwriter know that there's a problem. So we are trying to get to that artificial intelligence. Same with homeowners insurance. It'll be able to read the homeowners insurance, make sure the dates are in place properly, make sure the mortgagee clause is proper, that it has enough coverage. So we've really built the basis to try to do these bots. We ran a contest with everybody to get some ideas for anything in repetition, because we look at what a struggle we have had this year just hiring people. We hired 78 people that we never met in person during this pandemic because we're all still remote. And we just know that we have to be able to go to that next level. We can't go through and hire. I think we've probably hired 120 people this year with our volume, but it's so hard to hire great people. They're out there, but everybody's fighting for the same people. So we know to get to the next level, to that 3 billion mark, we have to go through technology. So this year, we're still driven on technology, still building the bots, still getting efficiencies. And now we found we've kind of worked out all the weeds and now it's going better for us. But we've gotten pushback. I mean, we're super excited about technology, but sometimes it's not accepted by your top producers. They're like, oh, I've always done it this way. Why do I have to do it this way? Because it makes us more efficient. If I can get through 7 underwrites in a day instead of 4, that's better for everybody. So it's really just selling that concept and making sure that everybody understands, it's for the better of everything in the organization, just to be more efficient through bots and technology.
You mentioned, thank you for going through all that. Hiring, everybody's obviously trying to hire right now, and the demand just greatly outweighing the supply. So how has your general success been? So I think another thing we've been hearing as much as anything from our members is just fear of maintaining, and then with new employees, instilling their company culture in this all remote environment, especially with a lot of new people coming on board. I know you guys are so all about your culture. At SMP, it's played a huge part in your guys' success over the years. How do you manage all that and manage record volumes of loans? How have you dealt with that this year?
It's tough because I feel when you're hiring somebody remote and you haven't sat with them face to face, I always say the stick rate isn't as good, right? They could leave you in 2 weeks, or they ghost you. Like, you hire them and then they don't come on board. That's happened too. But the ones that we've had that have stayed, depending on what department they're in, I always do an ops meeting, a meeting every single month. That's an hour. We highlight all our new people. We send them cookie baskets. We end up trying to, give them S&P swag gear, really to them to be engaged in our company. But we've done all sorts of contests every month, not just a sales contest, but we do company trivia. And they love trivia because we give prizes, but we do that so that they can get the history of the company for the new people, or we'll do name somebody's pet or, baby picture contests, just stuff so that people get to know us a little bit better. But it takes a lot of time and energy now without meeting people face to face. And, the price of what you're paying for underwriters and processors and loan partners is way more than we typically would pay for those positions. So we did launch a rotational program virtually. We've done the college program a couple times, but we just took 20 people that didn't have experience and they're rotating virtually through all our departments. We'll see how that goes. So far, it's been okay. But it's really spent a lot of time of the managers getting on Zoom meetings like this or Ring Central, having a powwow every single day, 5 minutes of motivation, 5 minutes of goals for the day, and 5 minutes of training. The most important thing for us is making sure that our ops team responds properly to our sales team, and just making sure they understand our culture and how we respond to emails, like email etiquette 101 or pick up the phone. It's a lot more work being remote, but we found by doing these type of things or sending them dinner, we send people dinner as a rotation, our stick rate is starting to get higher than it was before.
That's great to hear. And I just know that's just an issue all mortgage lenders are just battling right now, is not only hiring people you haven't met, but, making them feel the company culture and, all the things that have made a lot of these companies great. So really appreciate sharing all the great insight there. Just have a minute or so left. Any like big things like on your forward here to 2021 outside of the obvious stuff? And then part two of my question, volume next year. All things being equal, you guys are kind of perpetually growing, but just like same branch, same LO, like, coming off a record year, what do you think volumes will be, all things being equal? How are you looking at that for 21?
So I think this year we've essentially doubled. So last year we did about 1.3. We are just under the 2 billion mark as of October. So we think we're going to be about 2.3, 2.4. We think we're going to be about 3 billion next year with the growth plans that we have. But really for 2021, it's building out our infrastructure because we grew at $1 billion to $2 billion with the same management team that we've had. And so we really are going to be focusing on structuring everything out, making sure that our team leads are all in place and that are ready to be managers and take on teams. But that was one thing with the bots that why we were focused so much on technology, because to hire another 120 people, just to get them all acclimated. I mean, the one nice thing about a bot is, it always does the process right. The same thing over and over and over again. And for us, keeping all the staff that we have, we're at like 753 employees now, and being able to go to that 3 billion without hiring, 200 or 300 more people. So really for us, and expanding into different states. But interesting enough, we have been through 16 state audits this year. So state audits have not slowed down with the pandemic.
Good God. It's add that. There's definitely one thing I don't miss about being a mortgage lender, audits, especially coming from the banking world.
Yeah.
Allison Johnston, President, Success Mortgage Partners. Thank you so much for all the incredible insight and for joining me this week. Not lost on me how busy things are.
Well, thanks so much. And if anybody has any questions or wants to talk about automation or bots, please feel free to reach out. I would be happy to share the information that we have found and the stuff that we're doing with bots.
And Allison is on our board of directors, which is comprised of lender members of ours, and her contact info can be found on our website on like the About Us or Meet Us page where we have our board members listed. If anyone wants to do that, or obviously I can get you her contact info. Nice note in the chat from Ken Wells at Muskoma Bank. Have to run, but really appreciate Allison sharing some great examples of bot use. I would agree with that. So Allison, thank you once again. And
thank you so much.
of you that joined us this afternoon. Thank you as well. We'll be here same time last week in Mortgage Today. Thanks, and have a great rest of the week, everyone. Take care.
Thank you so much. Take care.